Hey everyone, welcome to another video on the channel. Today we're going to be taking another look at ZIM Integrated Shipping Services, also known by the ticker symbol ZIM. So, since the last we spoke about ZIM, you could see that we've basically been range bound trading between around $17 to $19 from December now into January, which you could tell by this 3-month chart, it's still a big drop from where it was even 3 months ago, let alone a year ago. But, this might be an indication that the selling pressure is basically exhausted. We'll see if that's the case. That's one thing that 2022 has taught investors is that even if a stock is crushed, if you think it can't go lower, oh, believe us, it can. Oh, it can. But will that be the case with ZIM? Impossible to tell, but I do think that's an encouraging sign. The fact that it hasn't been able to get pushed down over the past weeks beyond this level. And remember, in the past weeks were several catalysts we were looking for in terms of there were the shopping associated with Christmas and the holiday season, which, a lot of retailers had worse sales than they anticipated. So that didn't end up really becoming the tailwind that we had hoped for ZIM. But also, there was some talk of potential labor strikes and other issues. And there's also the China reopening that's happening that should hopefully, we'll see, act as some sort of tailwind for ZIM. But we're going to have to see how that plays out. But what can we expect for ZIM in the next coming weeks or months? Well, thought it's worth looking at this article. JP Morgan is basically saying that ZIM is going to continue to trade sideways for the foreseeable future. And I think the article makes a lot of sense. So we know that the stock is down roughly 57% over the past year, which sounds horrible, and it is pretty bad, but keep in mind a lot of stocks in 2022 were utterly crushed. I mean, look at a lot of these big names, like even like Facebook or Meta and Tesla, and all these stocks have been crushed, so nothing really shocking there. But in terms of its future outlook, there are some negatives here that we have to discuss, which is that the EBITDA will have halved for ZIM compared to even just 35% for Maersk, which is the largest ocean liner, one of their competitors. So EBITDA falling in half isn't great. And also, the unit cost is roughly 75% above pre-COVID levels versus only 30% for many of their peers, which JP Morgan is saying will likely create a loss in terms of EBIT in 2023 for ZIM. So we'll be on the lookout for that to see how this plays out. But he does mention that ZIM's already renegotiated a lot of their contracts lower. So any further pain, it's just going to hurt their bottom line even more. And this guy Bland at JPM is saying that they expect losses to continue into 2024. Although he does acknowledge that the short-term profitability has been very strong indeed, and we've seen that in past videos that they do have a very, very strong cash position and a very low amount of debt, which really should help them through these sort of dark times that the past few months and into 2023, maybe even into 2024 might be. They have like a huge amount of cash on hand and little debt, and so that should carry them through. And a final note that JPM assigned them a neutral rating with a $17.60 price target, which is about where it's trading right now. And you could see some other analysts. There are 2 holds, 1 sell. the analyst's view is that it's basically a hold, which, makes sense because, yeah, there are these ongoing issues. A lot of them have been factored in. Now, to look at another viewpoint, I wanted to bring up this this Seeking Alpha article, which again reiterates the fact that Zim was a darling to the investor community because of its massive dividend, but that dividend may likely be diminished substantially in the future, if not go away entirely in the next year or so. But Zim should also benefit from certain headwinds, which we'll also discuss now, which first and foremost are these new regulations from the International Maritime Organization. So another issue we've discussed in past videos is that there are new standards being put in place for fuel efficiency and relating to ESG friendliness, and Zim is ahead of the cut in that regard, which is great, which we'll see hopefully within the next few months or the next year, that a lot of these older ships are going to be taken offline because they're either just old and need to be repaired or scrapped, or they are unable to meet these environmental standards. So we'll see how that happens. We could look here. This is one of my favorite charts we've looked at so many times, the Freightos Baltic Index. So obviously we had that massive run-up in 2021 after COVID and the stimulus checks and everything else. Everyone was buying like crazy. Last year, we saw just a consistent decline. And now, where are we? We could see that, yeah, we're still pretty low, but it looks like we may be finally starting to bottom out, or at least kind of flatten out around that range, around the $2,500 range, which is still higher than where it was through 2020. So we'll see if we could kind of hold support around this level, or if we do decline more. But something else to keep a watch on. Now, in terms of the dividend, Zim has said in the past, as we've mentioned many times, that their plan is to just pay out 30% of their earnings in dividends every quarter, which that's great. If they are making a ton of earnings, but how is that going to impact us going forward? Well, analyst projections for 2023 and 24 implies dividends of around 51 cents from 2023's net income, which is substantially less than what we've seen this past year. So we should be expecting a substantial cut in the dividend this year, although they should be still paying out a decent dividend for at least the first part of 2023. And we'll see how the market changes or not, or if the recession fears really build up, or if they basically played out into 2023 and beyond, to see how that impacts Zim. But again, just remember that shipping is a cyclical industry. So, a thing that might actually help Zim is the fact that because it's a cyclical industry, and a lot of these companies, a lot of their peers might end up going bankrupt, or they might end up having to scale down because the industry is being hurt. So the more of their competitors that have to scrap their ships or sell their assets or maybe even go bankrupt, it's just going to be less competition for Zim, which will obviously be a catalyst. And also, as we've said, they've been modernizing a lot of their vessels to run on LNG, so that should make them more attractive to clients and investors who value ESG protocols and want to invest in those types of firms. And they've also have their other side business, their digital solutions or other businesses that we've discussed in the past that will hopefully continue to grow. So that's basically this. I mean, we'll have to see. Of course, the risks are pretty obvious in terms of just recession risks. That's really the big risk. We have to see what the market does and the rates and the Freightos rates and the container shipping rates and how they hold up or fail to hold up. Now, that is the big issue, is basically rates. And we could see that the rates from Asia to the West Coast have basically normalized to the pre-pandemic levels, which is not good for shipping companies. But as we've just said a few moments ago, Zim is fortunate in that most or much of their shipping is from Asia to the East Coast, which are going towards those pre-pandemic levels, but they aren't there yet. Excuse me. So we'll have to see how that plays out. I mean, it may be only a matter of time before they do get to those pre-COVID levels. And if they do, that will, it'll be a headwind for Zim. But at this point, I think that the JPM article may be the most helpful, at least for me, in analyzing what we could expect for Zim at this point. And it may just continue to trade sideways for a little while longer. And we'll have to see if that plays out and how these spot rates normalize or fail to, because as we've just said, some of them have gone totally pre-COVID, some of them haven't, so they're not all the same. So the transatlantic are still almost triple pre-COVID, So I'll be keeping a very close eye on the shipping rates and also any of the other economic indicators, and to see if, as well as the Zim chart, to see if we have basically flattened out or bottomed out, and to see if we could anticipate any future upside or if we might see further pain in the future. But let me know what you think. Are you holding onto your Zim shares? Are you buying more? Are you selling? I'm always curious to hear what the viewers are doing with their shares. And I'm not a financial advisor, so do your own due diligence before making any decisions. But let me know what you think in the comments section, and I'll catch you in the next one.